Welcome to today's market report. European stocks pulled back on Wednesday after surging close to pre-pandemic levels a day earlier, as worries about rising inflation kept investors on edge, with mining and travel stocks leading the retreat. The pan-European STOXX index fell 0.3% after hitting its highest level since late February 2020 on Tuesday. Economically sensitive sectors such as miners, travel and leisure, and industrial companies led the declines in Europe, while telecoms and real estate stocks edged higher. Meanwhile, data showed China's factory gate prices rose at the fastest pace since November 2018 in February. Among individual stocks, Zara-owner Inditex slipped 1.2% after it reported a 70% fall in 2020 net profit, as a year of global lockdowns kept many of its shops shut. Just Eat Takeaway.com rose 2.9% after the food ordering company said it expected further growth in 2021. Oil fell for a third straight session on Wednesday as investors took profits while looking ahead to US inventories data due later in the day for pointers on where prices will head next. US crude futures was at $63.47 per barrel, down 0.8%. Brent dropped 0.9% to $66.89 per barrel. Gold futures was down 0.3% to $1,711.40 per ounce. On the FX front, the GBP-USD pair quickly recovered around 25 pips from daily lows and was last seen trading in the neutral territory around the 138.70 to 138.75 region during the early European session. The pair witnessed some selling during the early part of the trading action on Wednesday and retreated further from three-day tops around the 139.25 region touched in the previous session. The downtick was exclusively sponsored by the emergence of some fresh buying around the US dollar, though lacked any strong follow-through selling. Following the overnight pullback, the US dollar was back in demand and inched back closer to multi-month tops amid signs of stability in the US Treasury bond yields. The greenback was further underpinned by the optimistic US economic outlook, bolstered by the successful COVID-19 vaccine rollouts and the passage of a massive US fiscal spending bill. Apart from this, a softer tone surrounding the equity markets further underpinned the greenback's relative safe haven status and exerted some pressure on the GBP-USD pair. The downside remains limited, however, as investors preferred to move on the sidelines and wait for Wednesday's release of the latest US consumer inflation figures. The reflation trade has been fueling speculations for a possible uptick in the US inflation and raised doubts that Fed would retain ultra-low interest rates for a longer period. Hence, the US CPI report, scheduled for release later during the early North American session, will now play a key role in influencing the US dollar price dynamics. In the meantime, the US bond yields would drive the greenback demand. This, along with the broader market risk sentiment, might assist traders to grab some short-term opportunities around the GBP-USD pair. Eurodollar extends losses towards 118.50 heading to early European trading. The pair slipped below 119 amid fresh dollar strength, and economists at BBH expect the world's most popular currency pair to reach the November 23rd low of 180 in the short term. The near-term euro target is the November 23rd low near $118. Looking further out, the November 4th low near $116.05 is our medium-term target. Much remains uncertain in terms of the fundamental trajectory, but from a purely technical standpoint, a break below the $118.20 area would set up a test of the June 2020 low near $111.70. The stronger dollar would tend to dampen price pressure here in the US, but helping to boost inflation in Eurozone whilst making their exports more competitive. The dollar was pushed higher by the stabilization of US Treasury yields following their drop from one-year highs. The dollar index was up 0.2% at 92.155 after falling back Tuesday from a 3.5-month high of 92.506. Dollar yen was up 0.3% at 108.83, while Aussie dollar fell 0.3% to 0.7690. The greenback has closely tracked a surge in Tuesday yields in recent weeks, with higher yields boosting the currency's appeal as well as shaking overall investor confidence, spurring demand for the safest assets. The benchmark 10-year Treasury yield stabilized around 1.54% on Wednesday after a 3-day drop from a one-year high of 162.50%. Dollar Chinese yuan inched up to 60.5073. This is today's market news. Thanks for listening. We'll see you next time.